we stand by XRP. This isn't a forecast, it's just our belief based on real-world use and growing adoption. XRP has already proven its utility, and right now, the timing couldn't be better. Big developments are shaking the crypto space, and XRP is right in the middle of it. Historically, moments like these have sparked massive growth in altcoins. The momentum is shifting, and it's doing so fast, as signals from Washington, including moves by Trump and officials like Scott Bessent, point to a shift in economic strategy. The Wall Street Journal shared that the White House is exploring the idea of cutting tariffs on China by as much as 50% to help cool down the ongoing trade tensions. The change in tone from US leaders over the past day has been crystal clear. We all know how much market volatility Trump's past statements have caused, but now he seems to be pivoting. His message is becoming one of stability and support for growth. Even his stance toward Fed Chair Jerome Powell has softened. No plans to replace him now, he says. That's a big shift. Trump mentioned he'd like to see interest rates go lower, calling it the right timing. He stressed he never intended to fire Powell, that media twisted his words, and that he simply wants the Fed to act more decisively. This kind of policy shift can be a major spark for financial markets. And for crypto, it's a green light. The US regulatory stance on crypto is also becoming clearer and more favorable. Leaders are calling for a stable and rational framework, one that provides clarity and security for investors while encouraging innovation. Wall Street is responding fast, introducing new crypto products like a leveraged XRP-based ETF, something unimaginable just a few years ago under the previous regulatory climate. This ETF is getting strong attention, especially from dedicated XRP holders, and that's saying something. The XRP community is known for its passion and long-term focus. With over 6 million XRP wallets, there's clearly demand for more ways to get involved. This fund is tailored for short-term traders, offering leverage without needing a margin account, a game changer for everyday investors looking for exposure in a traditional setup. We continue to believe in XRP. Again, no price predictions here, but we believe it's one of the few digital assets with a real-world function. Bitcoin may be viewed as digital gold, a long-term store of value, but XRP, it's got an actual use case, moving money quickly and efficiently. From what we've seen, the Ripple team operates with precision. They behave more like professional bankers than a typical tech startup, and their roadmap is solid. We're headed into a future where traditional finance merges with decentralized finance. It won't happen overnight, but the trend is undeniable. Ripple's ability to settle transactions in mere seconds proves just how much more efficient this system can be. People often say XRP is just for speculation, but that's not the full story. It was created to improve money movement, and now it's on track to help tokenize a wide range of assets. Ripple's acquisition of a clearing firm shows they're thinking long-term, building a bridge between old-school finance and the future of digital assets. This is only the beginning. XRP's foundation is strong, and its use case will only expand. And what's next for these leveraged crypto products? There's already talk of launching an inverse ETF, depending on investor interest. The same team behind the first 1940 Act-compliant Bitcoin fund is driving this forward. Their approach is simple. They only launch products they truly believe in. They believed in Bitcoin. Now they believe in XRP. Now shifting gears, some fascinating insights just dropped from Coinbase Institutional. According to their head of strategy, large capital players, think sovereign wealth funds and institutional giants, have been actively buying the dip since April. While retail traders were panicking and selling, big money was quietly scooping up Bitcoin. That's a pretty big clue about where they think things are headed. John D'Agostino, head of strategy at Coinbase Institutional, shared that during April, while gold ETFs saw inflows of over $8 billion, Bitcoin ETFs actually experienced net outflows of around $470 million. But while retail investors were stepping out, major institutions were stepping in, directly buying Bitcoin as prices dipped. What do these big players know that retail doesn't? It's worth thinking about. These institutions don't always report their holdings, but ETF data tells a compelling story. The smart money is preparing for long-term value and potential inflation. And while the ETF space is still catching up, direct purchases from these entities are already happening. Part of this trend ties into the unwinding of high-risk tech trades and a return to assets with intrinsic value. Bitcoin fits that mold. Scarcity, decentralization, portability. It's like gold, but digital. And for those who missed gold's rally, Bitcoin is looking more attractive by the day. Some traders see Bitcoin as the natural next step in a world where inflation and uncertainty persist. And remember, it's easier to carry $400 million in Bitcoin than the same value in gold. That level of portability, combined with its other features, is a big reason why Bitcoin is on every serious investor's radar. Commodity experts who used to dismiss Bitcoin are now including it in their inflation hedge models. It consistently ranks in the top 5 across various scenarios. So, while no single asset is perfect, Bitcoin is increasingly seen as a core piece of a smart defensive strategy. Whether it's about protecting against panic or planning for the future, Bitcoin and gold are standing side by side. And with all these shifts, from XRP's rise to institutions backing Bitcoin, it's clear that we're in the middle of a major transformation in finance.